The overriding concern here is the slowdown in China. In fact, we have TD Securities cutting its GDP projection for China for the year to 4.8 from 5.4. Daiwa Capital doing the same. What assumptions are you making about China's growth and China's demand for commodities in turn?
Yes, I think that first of all, yes, China being the largest commodity consumer, and so the severe lockdown, what we are seeing is really concerning right now. But we also see that the market is overreacting a bit. The lockdown has really extended as compared to the previous expectation. But this is the kind of lockdown. Things are going to normalize sometime, and demand is going to come back. So once cases starts, declining and the restrictions are eased, then we see the demand is coming back quite strongly, and we are in strong seasonal demand period. So the comeback should be quite strong, and we'll see pent-up demand could offset some of the previous losses. And on the other side, if we see Chinese authorities, they are still sticking to 5.5% economic growth forecast. So that means that they are going to intensify some of the economic supporting measures, and that should bode well for commodities demand in Q2 and Q3.
The thing is, some experts are saying that companies are beginning to panic because of the situation with supply chain disruptions, the chaos at the port. How will this play out?
Yes, this is quite concerning, but things will normalize in the coming months. So yes, if you see the economic slowdown, it's going to have 1 or 2 months of impact, but not for the whole year. So we are still positive on commodities demand side from China. On the other hand, if we try to compare the demand destruction in China, which is happening due to the lockdown, and the kind of supply situation we are in, I think supply situation should still outweigh demand slowdown in China.
So, Soni, do you think that Beijing is going to do anything to put a floor on these prices? Just given the drop in metals consumption, could they counter that essentially with some sort of massive infrastructure spending?
Infrastructure spending they have already announced, but there are some concern, like they have started doing the stability measures to support the property market and construction from December onwards, but it's not visible in property indicators so far because of the uncertainty the market has seen last year. But this is going to give a sentiment boost to the market if China is going to give more stimulatory measures to protect the economic growth.
So is it just the China lock? Is the China lockdown story the only thing that's kind of weighing on commodity markets right now, or do you see other factors? And does that actually offer some opportunities for investors right now? If in fact you're saying that things are looking a little bit overreaction in the markets right now, could we see further repricing then?
Yeah, there are some other factors as well, like for oil, it's SPR release and some of the supply easing, what we had seen recently as compared to the last week. So those all factors are playing out in the market. But in case of metals, yes, aggressive rate hikes in the Fed is also bit negative for the market, and it's weighing on the market sentiment right now. So it's not only China, there are other negative factors which is playing out right now.
You talk about oil, crude below $100 a barrel. There are concerns that perhaps the EU will sanction Russian oil. What impact would that have on oil prices? What assumptions? What's your base case?
Recent the kind of the disruption we are seeing because of the Russian invasion is it's quite strong, and so far, the Russian production has come off nearly 1 million barrel per day, but it's going to be larger. The market expectation is it's going to be as big as 3 million barrel per day, which will not be compensated by SBR release and some of the supply restores in OPEC group. So overall, the market is going to react quite furiously if Europe is going ahead with, completely sanctioning Russian oil and gas imports.
Iranian supply is set to come back to the market within the next few days. How soon do you think that will have an impact on supply and prices?
Okay, I think it's looking quite uncertain right now because of the kind of destruction we are seeing, and there are concerns that infrastructure for gas supply is also getting impacted in Ukraine. So we should be mindful that things are not going to normalize very soon, and supply disruption is still there in the market.